Let's talk about some of the positions that you've taken. You were short Valiant. You have covered that position now. Was it because of the restatement, the $58 million, that changed your view?
No, I covered Valiant beforehand. There's a lot that is uncertain with the company. And at these prices right here, I'd rather be in situations that I have more certainty. I think the restatement is the start of a longer process. I like the fact that now the public discourse about Valiant is out there. I thought Wells Fargo did a terrific job in covering the risks associated with the company. But as an investor right now, I find the stock uninvestable on the long side. And at the same time, I didn't find the complete risk reward on the short side. Notice my report put a $50 price target. Stock got to 68. That was from 150. Pretty darn close. If that's the case, I think, sometimes you take your money and you move on.
Speaking of price targets, you gave one for Monster a couple of weeks ago, I think an $80 price target. It's trading at 120 and change. Why I mean, you're obviously bearish Monster and you've taken a short position in it. Why?
I think Monster is it's a fine company. If you put aside all the risks involved with energy drinks, Monster has been executing. They've done a terrific job executing. And we saw yesterday they're actually buying someone in their supply chain. So traditionally, when you do buy someone in your supply chain, you're actually admitting to the fact that you're a more mature company, that maybe your larger growth might be behind you. And now you're more concerned about keeping the costs together. So that being said, I just think Monster should be more valued like any other beverage company that has equal competition to it. And that would put that at a considerably lower price. And I said, in a market that valuations matter. So maybe in a market today where we take such monster swings, in the market valuations won't matter. But pretty soon, when valuations do start counting in this market, I think Monster has some downside risk to it.
Yeah, your report is just a little bit more, vocal than that, a little bit more hefty. You talk about Monster going into China and saying it basically doesn't have a chance. Yet there are 15 analysts on Wall Street, 10 of them have buys and 5 have holds. And one of them says, at least one of them says that the China story is where Monster will see the upside.
It is completely and utterly ridiculous. Monster, I'm going to give credit to Monster management in saying they're bright people. And let's also give credit to understand that China did not exist as a consumer market in the past 1 or 2 years. I think Monster might be the only consumer discretionary product on the S&P 500 that is not sold in China. So first, you have to worry about getting a license in China. Second, you have to worry about the costs of selling in China, meaning you're not selling a can for $3.50, like Red Bull has a complete different type of Red Bull that they do sell in China. And then you have to worry about making a complete brand. What Monster Energy is, it's a brand. So they sell you a lifestyle in the can, pretty much. No one says, oh, I drink Monster because it tastes so good. But you associate yourself with the brand.
Just want to,
so there's a lot of cost going to bring it.
Monster has that.
What I'm just saying is this. Don't listen to me. Listen to management.
All right.
If management hasn't been to China in 19 years, or Monster's been around for maybe 12 years, if they haven't been there, there's a reason why.
Well,
you
yes,
don't wake up today and go, maybe we should go to China.
All right, but we haven't heard from Monster, and we are trying to get into contact with these companies, but Monster would say that Coca-Cola has been to China, and there's very much of an overlap between the distribution of both companies at the moment. Let's move on to another short position that you've taken up fairly recently. Would you like to tell us what it is?
Okay, well, we'll have a few. We saw Mobileye reported earnings today, and the stock opened lower, but with the rest of the NASDAQ, it went higher. I called Mobileye at one point my short of the year for 2016. I think Mobileye is as comfortable of a short as you could have without ever getting inside information. This is pretty much as good as management will tell you. When you look at a management that can't sell enough stock, it's not dedicating any money to research and development. I brought up this case earlier last year, and midway, and late last year. And then management on the conference call today, management said, I think we're going to dedicate more money to R&D. So it's nice that they're letting short sellers dictate it. You mentioned earlier on that you're actually shorting Gap as well. I just want to ask you why you're shorting Gap. Short interest in Gap is rising. Why that's short? Well, right now I'm short Gap stores. I just think in this way it's become completely irrelevant. If you look at everything that has come out all of the surveys of what teens do, where people buy, how people shop, you see Gap is irrelevant. They're closing stores. Anyone who's watching the show, go to the mall today, walk into Banana Republic, walk
What's
into
your
Gap.
price target, by the way?
You could swing an umbrella and not hit anyone.
What's your price target on Gap?
You know, I haven't done enough work to actually realize once they take the charges for closing stores and what's going to look like for the next 2 to 3 years. But I think there's no reason why Gap does not break 52-week lows. So I think Gap will probably trade lower than $20 within the next 6 months.